YouTube, what's going on? This is the active trader TerrenceRe, and this video right here is going to be a video on the basics of technical analysis. I'm gonna do a little series and kind of mix these in with some of my trade analysis and things like that. We'll try to mix in some of these videos and have a little playlist or a little series. Basically, this is for beginners. So if you already know this stuff, then, obviously it's not for you, but this is something that, a little quick video that beginners can use to get going, and you can do, any kind of trader can use this. So let's get right to it. For this particular video, I don't want you guys, I don't want to take away and distract from what's going on. So normally I leave my face on the camera so you can leave, on the video, you see my expression. So I'm going to take it off. Just so I want to be able to focus on the actual candlesticks of the chart. Let's get to it. All right. If you look at the center of the screen, this stock right here, I'm on TradingView. I like TradingView as far as just doing like technical analysis. I've said it before. I'll put a link in the description if you want it. You can get a free account on here, and I mean it's loaded. It's loaded to the gills with everything. As far as like charting goes, it's like a social media platform for traders. You can follow traders and get trade ideas on there as well. So right here, this particular stock is AT&T, and when you start, one of the first things that you're gonna learn, or when you first start trading, or you want to look at a chart, look at a screen, whether it's on your phone, whether it's any, first thing is candlesticks. Right on this particular stock right here, this is I got two different types of candles right here, and I'll go over some of these different ones, the ones that really stand out. This big green bar right here, when you're looking at a candle, this is called the body. This part right here where the square is the body. If you look at the one next to it, this red candlestick right here, it's a small part. That's the body, right? Right here, this candlestick next to it, the red part, that's the body. Now, like I said, this is beginners. Most charts, if you can change the colors of the candles, but for the most part, green is up, red is down. Anytime you see a long shadow or wick, like this right here, I'm gonna move the curve right around in this area right here. That is an area where you see that on this particular candlestick, it moved down this day. During the day, this is a daily chart. The actual stock had selling pressure and was going down, and then throughout the day, it was bought back up by buyers. So it actually opened here at the top, and then it pushed down, and then it closed right here just a little bit below the top. And if I leave my cursor right here and you look up to the top, right up here in the top left corner, it reads to you the open, which was $32.15. That was at the top of the red. It reads to you the high, which is a small wick at the top, which you can barely see. This, if you want to pull this up on your chart, this is July 23rd, 2019. And the low is $31.52 on this day for AT&T. And that is down at the bottom of the wick. Now, some would call this, for the most part, I would call this a hammer, or either some people may call it like a spinning top or something like that. But whatever name you call this, for the most part, you can see that this market pushed down on the day. Like it actually went down on the day and then pushed back up during the day. So it didn't stay down. So somewhere in this area, it was a lot of buying pressure, and it closed letting you know that it was buying pressure right there. That next day, that buying pressure continued up. And I'm using my hand gestures. I'm going to put my face back on just so you can see I want you to be able to see. So with it pushing up, going into the close, that next day you can see you got a big green candle. This is what you would call an engulfing candle, a candle that engulfs previous days, like taking out this day. This one green candle, and on green candles, it opened at the bottom and it closed up here at the top. That is the direct, like, opposite of a down day candle or a red candle. And this would be for most traders, or whether they be intraday or they active traders, it don't matter whatever time frame you're trading on. Most people would buy on this candle. They would either buy, if you're on a daily candle, some people would buy at the open of the next day. Some people would have bought off of this wick right here and put their stop right here, meaning they would have set a buy order to open on this day, because this candle is kind of like telling you that, hey, it's a lot of buying pressure right here, pushing this market up. So some people buy right here, put their stop order right here, meaning they buy at 32, I'm just going to say $32, just to keep it simple. And they stop order went down here, maybe 31.50, right? And they would have just held this trade. If it didn't ever come back, they just hold it. And then you come up with a mechanism of how you get out of the trade. And that's all. And it's like, for me, I look for stuff that stand out. I look for, like, this kind of like hammers. This would be a hammer. And the opposite of this, someone would call maybe an inverted hammer, or, a hangman or something like that. I don't get caught up in the names. You got all kind of names. You got the morning star. You got the shooting star. You got the abandoned baby. You really have these. When I get done with this video, I'm gonna put a link in the description to a free PDF that you can download, put on your phone, print out, whatever you want to do with it, and you can learn these names. I don't think that it's. I don't think you have to do it. But if it's something that you want to do, you can. I'll put the link in the description. But for the most part, that's the base. That's the first thing you want to deal with, I think, when you're trying to learn how to break down the charts. Just looking at the candles. You're looking at for a higher, like this candle. Once you got this candle right here, it pushed up. This big green candle, it took out three candles. 1, 2, 3. This candle took out the 3 previous candles. This was a lot of buying pressure on that day. So what that means, there were a lot of buyers right here waiting on this area. Some people this was the price where they were willing to buy AT&T. Like, this was their price. Like, this is where they found the value of AT&T. And so you see it push up. And then generally what happens, like I said, if you've seen, watch some of my previous videos where I talk about that mechanism of the market being alive and it breathing, and the market like creating like that pullback, that rubber band effect, where you stretch the band. And here's the big move initially. And a lot of people miss the first initial move, the first wave. And then you get the pullback. That's the rubber band pulling back, and then boing, and you see it. And then you see the big move. I'm not getting into Elliott wave or anything like that, but that's some more of that, or the Dow theory of things happening in threes. You get one move, you get the pullback, then everyone hears about the move, and then they come join in, and that's when you get the big move. And so that's basically, I'm just making it real simple. Some of those terms you can Google and look up. And I think that overcomplicates it. You don't have to get that deep into it. Let's find some more candles, some more this is a doji candle. And generally this is one of the most famous candles, that and the engulfing, because that's the indecision candle. This candle right here, It's showing you that the sellers and the buyers, it was basically a stalemate. You had just as much selling pressure as buying pressure on that day, to the point to where you don't even have a green or red. This is just that you actually don't. You have a cross, and then on each side of it, you got two candles that look identical. So on this day after the doji, it popped up. So if you were day trading this, meaning like you were trading it for a day or two, you may have bought at the open. When it pulled down and then popped back up, you may have put in a buy order, put a stop down here at the low, or put a stop down here somewhere below the doji. And from maybe here, 37.15 to here, 37.93, not a real lot, but it just depends on how long you held it. If you just held your stop below the doji, like I said, that's a turnaround point. It doesn't come back down and break that low. It still doesn't come down and break that low. Just look at it. Just look. If you leave the stop here, it challenges you. It makes you breathe a little hard, but it does not come back down until after it has gone up from here, 37.17, to here, 39.48. Now, that is candlestick charting right there, for the most part. That's trading each candle by each candle. This is a daily chart, and you can go down to any time frame that you want to trade on, and it's the same thing. You're looking for big bodies or long wicks. That's what I look for, and I look for dojis. I don't trade candle by candle, but for the purpose of this video of getting into the basics of technical analysis, you got to start with the candle. You want to start with the candle first, and then you're going to couple the candle with volume. I'm going to show volume, because the majority of the time when you see these big candles, you're going to see high volume. This is the volume at the bottom. See right here where you got this big green candle? This is more volume than the day before. See that? This volume on this big green candle was more volume than 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. You got to go all the way back. You got to go all the way back down to this low right here, where you find more volume on a day, and this is May 31st, 2019, than you had on this day when you had this big green candle. That is a dead giveaway. That lets you know that there were buyers waiting right around to this area to get involved in this particular stock, and you can see the result of it. Now, also, you can also see right here at this $38 mark, this is where profit taking took place. This is where people covered their long positions. You can see that. Look at the volume. Look at this volume. It was a lot of selling going on this day. I don't care why. I'm sure it could have been news related. It could have been a lot going on that day. I have no idea. The chart would tell you something was going on. You really don't need to know what went on, but you know something went on. Look at the volume. Look how that take out everything. That lets you know people were taking profits right here. I doubt very seriously that people were trying to actually sell right here. This is where people were covering their long positions. I mean, like they owned the stock here and they were covering their long positions right here. And you had profit taking. And then you had this candle, this body of this candle is inside of this body. That would be considered, if I'm not mistaken, the name of that would be an harami candle. And it has kind of looks like a pregnant woman with a baby. You get into, that's why I don't get into the names, because it sounds kind of silly. But once you start reading some of these books and I have read some books on it, Japanese candlestick charting, and that's what this would be. But you don't really need to know the names as much as you need to understand what's going on when you see it. So I hope you guys, I want to keep this video short. I hope you guys got something out of it. Once again, look for the wicks. Look for wicks. Look for long wicks. Look at this long wick, and you see the market went down. Look for long wicks and look for big bodies, and look for the volume on the days where you get those big bodies. And then a lot of times that will signal like reversals in the market. That'll give you some of your big moves, and you can play it how you want to play it. I'm not gonna tell you how to play it. One other thing before I get out of this video. That's why you gotta always watch my videos to the end, because I'm gonna give you something that may be actionable. Depends upon you. I'm not advising anyone to take any trade. You trade at your own risk. But I noticed this today. I was not even going to use AT&T to do this presentation, but I'm going to show you something, and then I'll get into trend line drawing in the next video. So subscribe and make sure that you'll get an alert when the next video comes out, because with every video I generally I'm going to add a little bit more and then give like a little tip on a stock or something that I see going forward. AT&T, this is something that I would consider to be a trading range. Now I'm going to come over here and draw a trend line. And basically all I'm doing, what color do I want this to be? I want it to be able to pop. Let's do yellow so it show up real good. I'm going to draw a trend line just right here through the wicks. Just easy, even if you don't know how to draw them. All I'm doing is drawing it through this range right here, right? Let me see if I can. Let's come right here. Let me get another one. Come on, give me. Look at this range. You don't need to know anything about technical analysis or anything to see that this market, I'm gonna bring it back. Now all I did was, for the most part, I draw all of my trend lines on daily charts. That's just me. Now look, you can see this range. Boom, 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 boom. It's just tight. It's tight, like it's wound up. So you got contraction. You got contraction. Whenever you get contraction, look right here. Contraction, contraction, expansion. Boom. You got it expanded. You know, you get your contractions, and then you get expansion. If I put Bollinger Bands on here, you will see the contractions. You know, Bollinger Bands is another. As I go further and further into technical analysis, I deal with some of the indicators. You don't really have to have them. The simplest way is to find you one or two indicators, maybe one that you might use. It could be moving averages, whatever. Keep your trading simple. Look right here. It's in a range. So what I'm thinking with AT&T, now this is just my opinion. You know, I will watch this probably every day going forward. Now it's been like this since June 26th, right around and it's been like this for a couple months. So you got this range. I think that either way, it's either gonna pop out of here. When it pops, I don't know which way it's gonna pop. If I gotta take my bet, I'm guessing to the top. Any type of news on a stimulus package from the federal government, any bad news, any news whatsoever is gonna make this pop out of here. Whether it could be some news with the company, but what you will get, I'm gonna make this red. So you'll either get something when it pops here. You'll get something where it comes back and tests this range, and then boom, you'll get that. Or you'll get, let's see, give me another one. I don't get you out of there. Or either it'll come down here, test it, boom. That's what you, one or the other. And so you draw trend lines, and then you wait on it to break. You want to see a decisive candle, something like this, a big red candle, big green candle. You want to see something like that, and you want to see it on high volume. You see the volume at the bottom, where it's showing you it's in a range with the volume at the bottom. You want to see that volume whenever we get this candle. You want that volume to look like this. You want it to look like that, where it breaks out of here. And then you look to trade accordingly to your assumption, whether you think it's going to continue to go up or whether you think it's going to continue to go down. So that's my nugget right here for AT&T. If you're an options trader, you can be there are a lot of different things you could do. You could be selling iron condors. Now it's tight and wound up, so that iron condor may not be great to put in right now. I generally like to put on iron condors when the market is stretched, and because then I'll skew my iron condor to whatever. Like if right here or somewhere up in here, I probably would have sold it, put something here, and then made it longer down here, right? I would have gave it more room to the downside. I would have skewed my iron condor. Or this stock, this is a cheap stock. You can actually just do a strangle, which basically is an iron condor without the wings. If these are option plays. If you're just trading stock, you just looking to pick a direction. This isn't a bad place to buy some stock, because you don't have much to lose. You know, AT&T is a stock that's generally, for the most part, is going to be, if AT&T goes to zero or goes bankrupt, we're in a lot of trouble. A lot of stocks going to go to zero. So you could be accumulating shares in here, which is probably, I think that's what's going on. That's why I'm expecting to get a big move out of here, because people are buying shares, accumulating shares here. And I do believe AT&T pays a dividend as well. It's a dividend stock. So when you get this move, it's going to make a lot of money for some people whoever's on the right side. Whether you can short shares, if you have experience doing that, I tend to believe myself that it's going to bounce to the outside. That's just what I think, based upon the fact that, let me take this off. Come on. Based on the fact that it bottomed here, went up and pulled back, and then broke that high, I think that this move right here was just the end of this move, and now it's just waiting. And I think whatever happens is gonna I think it'll come up at least fill this gap right here. And I think ultimately this is a gap right here too. So, and then you got a gap up here. So I'm expecting AT&T to make a move to the upside. I believe the Federal Reserve is gonna keep printing money, and eventually, the president, Democrats, Republicans, whatever, they'll come to some sort of agreement, and they're gonna send some stimulus checks out, because they know if they don't, this market is going down. That's the only thing that's propping it up, in my opinion. And it's election time. When it's election time, you get what you want. It is what it is. But I hope you guys got something out of this video. Subscribe, like the video, look in the comment section. I'm going to put a link to a PDF where you can print it up for yourself and study up on candlesticks. If that's, for yourself for free, study it for yourself. Tune in to the next video. I'm going to go more in depth on trend lines, and then I'll start talking some more about indicators and some of my favorite indicators and what I like to use. On that note, peace.